I think it's very fair to say that the currency markets sum up many of the issues we're facing right now. Obviously, the dollar on the one hand is very closely tied into what happens next from the Fed. At the same time, we've also seen the key role of the dollar for commodity currencies. Now, we can argue about that causality because it does run two ways, and that ties in very broadly to the emerging markets. The stability of the Chinese currency, obviously a very important issue. So it all really links in. And then last week, of course, big story was that significant rally in the Japanese yen, going up by over 3% in the week. So you can see how the currency market brings it all together. And what's quite interesting is you see a couple of gaps at the moment. If you look at the volatility in currency markets, that's actually gone up quite a lot, whereas the volatility on the S&P is still quite low. So there is a bit of a disconnect. Now that could persist for a while, but there is that disconnect. And you see it again on US bond yields with the S&P as well. A little bit of a disconnect there.
But we know the answer to that one, because in equity markets, they think they're geniuses, but actually the VIX goes down when the market goes up, and the VIX goes up when the market goes down. And sometimes the VIX doesn't even go up when the market goes down because it goes down too slowly for the VIX to actually go up and the Vega to be an important thing. We know that in equity markets, whereas in foreign exchange markets, because it's a two-way and the markets can't work out if they want dollar up, dollar down, yen up, yen down, that's why volatility, real movement in the foreign exchange markets equals volatility increase. But whereas on the VIX, it's only one-sided.
But what we do tend to see is that those disconnects, and I think it's a disconnect that holds my interest at the moment, they don't tend to last forever. And I think that's really the question. Do currency markets volatility calm down here, or do we see equity markets beginning to get a bit more edgy? And the other thing, sorry, I'm having a bit of a volatility thing this morning, but I think what's really interesting as well is we've seen a lot of inversion of the volatility curves, which also events that currency markets are a bit concerned about some of that event risk out there. And of course, a really big one in the room is the 23rd of June UK referendum on EU membership.
Point out that date, but that's not the only risk event on markets. I mean, there's been so much speculation about any intervention by the Ministry of Finance in Japan. So you talk about what's going to be correcting here. Is it going to be central bank intervention that corrects from the volatility in the market yet again? Because you've got to get the yen rate to shoot a little bit weaker here from these very strong levels for the Japanese.
But I think that's really interesting because when we look at what's actually been going on the yen for quite some time, going back to the sort of pre-QQE intervention levels, what we saw is that yen is still down by about 20% in real effective trade-weighted terms. So in absolute terms, it's hard to say that the yen is really that strong. Yes, it's come up, but it's really not all that strong. And I don't think it's strong enough for the Japanese authorities to gain political support here to actually have an intervention.
They're trying to make the case, though, aren't they? Taro has been out in the press talking about one-sided moves, how they've got cover for that, there is room to move if you're facing an attack on your currency. Is that what they're facing, or is he putting up an argument that isn't really correct?
Exactly. A lot of that intervention right now is much more verbal. And obviously the Japanese authorities would like their currency to be a little bit softer, especially because of what's happening in the domestic economy. But I think the really big question is, what policy response would we see here? The negative policy rate from the BOJ has not been met with much success. QQE is already very much at its limitations. They could do more, but it's hard to see how much more. So the real question is it the fiscal policy tool that we see being used here? And I think that's the interesting one to watch in Japan.